The second day of trading and second day of pain, it seems, for Uber. Shares of the ride-hailing company down more than 9% after falling nearly 8% in its trading debut Friday. Bloomberg's Kailey Leinz is here with more.
Yeah, it's terrible, terrible timing for Uber to go public. And part of the issue today, of course, is this broader risk-off sentiment. But the other part is that there are some serious questions about the viability of profit for this company. Of course, it isn't profitable right now on a 12-month trailing basis, a loss of $3 billion. And they're going to have to continue to spend on subsidies, on R&D for their autonomous business, for example. And that's all as their ride-hailing business, that core business, is slowing down. Actually, in the first quarter, it's expected that the total revenue from rides for Uber is going to fall about 1% sequentially. And so that business is slowing down. That growth could continue to decelerate, especially given competition from rivals like Lyft, which I should mention also are down today, have lost about 30% since their IPO. So it is a concern, and there is question as to whether these other businesses, not necessarily the ride-hailing, but with Uber, what a lot of analysts kind of heralded as what differentiated it from Lyft was the fact that they had Uber Eats, this food delivery business. And there is still a question as whether that's going to be enough to carry the company to profitability. They do command a pretty large market share, about 23% in that third-party delivery business, but that also has competition. So how much is that really going to be contributed is the question here.
Is everybody negative? A lot of people seem to be, but is everybody?
Not necessarily in the longer term. Actually, Agal Aronian, who's an analyst over at Wedbush, he still has an outperform rating, $65 price target on Uber, and he admits that this is a prove me story. He said this was never going to be an overnight success, but he said if Uber executes perfectly in the next 12 to 18 months, they could end up with a valuation of $100 billion or more. But as the market's telling you today, there isn't necessarily the faith that they are going to be able to have that perfect execution.